Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and this is for educational purposes only. And now that's out of the way, let's jump into what's been happening on Bitcoin. So we're going to keep things short and sweet as usual, guys. I'm going to run through what's been happening and what I'm looking for next. We're going to do things a little bit different this week, so I want to share some setups with you guys that we've taken throughout the week, because hopefully you can learn from this and you'll get more of an idea of how my mind works when it comes to trading and how the guys in the group work as well. So as you guys know, obviously the high time frame, nothing's changed. We're quite clearly range bound. So let's zoom into the 1 hour chart and we can see that we're range bound. Now let's just throw it on this range that we're talking about here and we can see exactly what's happening. So we've got lows, highs, lows, highs, lows, highs, 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 and then obviously loads of respect around the EQ. Okay, so we've got this sideways range, and last week I was poking fun at the idiots that were all, doing this. Again, we saw it this weekend. That there's so many people trying to force fit patterns in here. We had these I don't know how you draw these diamond patterns, and there's just so many patterns that people are trying to force fit into this range. And lo and behold, none of them are working out for them. And again, that's just because they're idiots and they ain't got a clue how to trade. Literally, all you needed since Friday the 17th of March, all you needed was 2 parallel lines on your chart, or if you want to use the range tool's up here. It's called the parallel channel. That's literally all you needed within this, and you could have had lots of profitable trades within this range. Okay, so let's talk through obviously something that's happened this week. So let's start off with Monday. So on Monday, let's remove this. On Monday, I came into the group in the morning. Every day I post my updated trading plans, as you guys know. If you don't know, then you do now. And I tell the guys the areas that I'm interested in trading. Okay, and that's dead simple. I tell them the levels that I'm interested in, and if it gets to those levels, then I'll let them know when I take a trade as well. Now, it's not signals, because I don't give signals. The guys have got so much informational content on our website that they have learned from what I teach, and they know exactly what I'm looking at when it gets to these kind of levels. So Monday's plan, we can see here, I'm talking zooming out, nothing has changed. All areas of interest below and above remain the same. Okay, zooming in, the local range remains intact and I'm still actively trading it. Okay, notable areas within the range, if given a reaction, are the weekly naked point of control / value area high, and then the fresh daily at 27,115 / daily naked point of control. Now, this is what happens. So this is the plans I'm making. So I'm looking at the charts every single morning. I'm making my trading plan. The only areas on the chart that I'm interested in taking trades. Okay, so we can see here. We zoom in. We can see here. So this is Monday. So Monday morning, roughly around 7 a.m. We're down here. This is when I'm giving the plan. I'm giving the plan at 9 a.m. And what we can see is price spiked up, and we can see this is the weekly naked point of control. I've left it on the chart now, but it's an old one now, so it's gone. / the value area high. Price came up into the value area high, tagged it perfectly, and then we saw a nice move down towards the other area of interest, which was the fresh daily at 27,115. Okay, we actually front run it in the end, but we had plenty of excess down here. So what can we see here? Well, we can see here we had a lovely trade from this value area high / weekly naked point of control, and then we also had a lovely long trade from down here. Now, anyone that's inexperienced is looking at this, and this is where people don't teach you right, and this is what really infuriates me about the market and about influencers trying to teach people how to trade. So anyone that looks at this goes, well, all right, well, that's a shit move, is that Spit? Because at the end of the day, it only moved 4%. So it's a 4% move, that's crap, that's not going to make me much money. But what these people don't teach you is risk to reward. Now, if you want to know about risk to reward and position sizing, then we've got a video in our trading tips playlist that teaches you how to work out position size, how to plan your risk management, and effectively how it works out in the end when it comes to a trade. So if we look at this trade in the end, this trade ended up being a 10.49R. Okay, so therefore if you risked $100 in your stop loss, You know, if it stopped you out, you lost $100. But if you held on to this trade all the way through to the take profit, which was the other area that I was interested in, then you got 10 times that back. So by risking $100, you made $1,000. Okay? Now again, it's not financial advice, isn't this? But this is how it works. And this is what people don't teach you. People go, oh, it's a 4% move. Well done, you got a 4% move. But no, the reality is you got 10 times your risk back. Okay? That, for a 4% move, is an exceptional trade to take within a tight trading range. Okay? Likewise, the move back up. Now, the move back up, because the level got front run in the end, we did have excess down here, which is what's the reason why we took the entry in the first place. Your risk was defined below this naked point of control, and in the end, if you took it all the way back up to the value area high, you got just shy of a 5-to-1 risk to reward. So you got back 5 times your risk. Okay? So that's Monday done. Monday wrapped up 2 trades, 2 winning trades, and if you were smart about it, you made a lot of money. Rather than trying to trade all these silly triangles and everything else, you just trade in the range, trading the most crucial areas on the chart, okay, with high confluence. Because that's what I am. I'm a confluence trader, so I need multiple levels of technical analysis to line up on an area for me to make a trade, okay? Sometimes I will get it wrong. I even talked about it on last week's video, how the start of last week I ended up losing, because it does happen. It's all about statistics, right? So that was Monday, right? So hopefully you can learn, you can understand how these work. Right, Tuesday I took off. I ended up taking the family out for the day because it was a very profitable Monday, so why not? It's the Easter holidays, the kids are off school. Great stuff. So Wednesday, let's talk about Wednesday now. So Wednesday's plan, I'm coming into the group, this is at 9:10 in the morning, and again, I'm saying the high time frame and low time frame areas of interest because the guys have my high time and low time frame areas of interest already. Still in play. Now, the range high gave a nice rejection. This was in the early hours of the morning. Now, luckily, my alert actually went off and I wasn't sleeping very well because the little one was up. So I ended up managing to get this first trade. And I'm saying it gave a nice reaction. And it was worth a scalp at least, but price action was sitting outside the value, and right then it was sitting outside value because the value area high was here. So it was sitting right on top of value. Now, through the day, what happened? We then get another spike up. We had quite a volatile spike up. Now, if we look at the order flow, we can see that this volatile spike up, let's get on the right thing, we're on ETH there. I am currently in a short on ETH as well at the same time because it gives a perfect setup. Right, so this was the range high in the early hours of the morning. We came down, and then we got this volatile spike up. We started off as a move down, came up as a spike up, and on the spike up, what we did was we ended up taking the stops of anyone that had stops within this region, and we can see this nice excess up here with a point of control, so we know that we've had a liquidity grab here, and we failed to get back above this excess. Now, this is, again, something that I teach. Failed to get back above that excess. That for me was a trigger to get back in that trade, add back in, and in the end it gave us a 3-to-1 risk to reward. Okay, so it's a good trade. Now, at the same time, I'm then coming up into the group later on, and I'm saying the fresh daily around 27,798 could be interesting, see if we get a good reaction. We've got a daily there, a golden pocket, and the EQ of the range. Now, we can see here, we've got this golden pocket here, we've got this fresh daily level here, and we've also got the EQ of the range. So, coming in, we came down. Let's just hide this one for the time being so we can see. We came in, we hit this daily level, slash this golden pocket, didn't come down to the EQ, got a nice reaction, enter the trade, there we go, we got another trade. Again, you're looking at this and you're saying, well, that's only 1.56% in the end, right? But it's ended up being a 4.6-to-1 risk to reward. So in the end, 4 times your risk back in profits, okay? And the take profit on this was quite simple because we came up into the VWAP. We actually front run the VWAP. Okay? So this is how you can plan your trades. You're looking for your high confluence setups. If you are going to scalp within the middle of the overall range, you only want to scalp the high probability setups. If you don't want to get involved in the middle of the range, that's absolutely fine. Just stick to the outside of the range. Because even just sticking to the outside of the range, trading this very simply, you come up into your highs, stops above your most recent highs, and then you've got a take profit 1 at the EQ. If it does continue beyond the EQ, then you've got your take profit 2 at the other side of the range. Okay, so you literally could have traded this to both sides of the range most of the times. At the moment now, we are just consolidating in the top half of the range. Okay, so hopefully you've learned something there. And I've rattled on for a while, but hopefully you figured something out. Right, okay, so local range, this is no different. If we end up coming back up here again, then we can either look to take the highs again, swing failure pattern back down, and then you continue trading the range. Just like if we come to the lows, we could either take out the lows, reclaim back in, and again, you want to see that reclaim back in. You don't just want to be blindly longing down here. Reclaim back in, see that strength, see that structure change, and then you've potentially got a long trigger, okay? So that's if we are to continue trading this range, okay? If you guys want to get my morning updates like you see, and also learn how to trade like I do, then first things first, come over to our website, spitfiretraders.com. Come join our free Discord. Loads of alpha shared in our free Discord. And some of the members also pop into the free Discord now and again and share some of their alpha and some of their ideas, which is also great. And then obviously, if you want to take your trading to the next level, then come check out our TA course. Everything you need to know about it is in here. And you've also got the video library here, which will give you an idea of what's going on in there. We're currently starting a new set of modules, so this actually needs updating because there's even more on there now. But yeah, it'll cost you the grand old price of £60. For £60, you can get over 100 hours worth of educational content. Okay? Tell me that's not value. Right, now let's zoom out of this. Let's look at the macro picture, shall we? So the macro picture is in play right now. Let's get rid of that. We don't want to do that. And we'll get the high time frame range. We can see here the range fib tool that we've used, and we've been banging on about for far too many months now. We're still sat between the outside deviation and the first deviation, okay, which is what's effectively capping this small range, okay? If we do come up higher, quite simply, I'll be looking to come up into this consolidation up here, okay? So we've got this whole zone here, which is resistance above us, okay? So if we do manage to get above this and we carry on up, then first and foremost, we're looking at that point of control, which is around 30k, which obviously is a hell of a lot of eyes on 30k. And when there's a lot of eyes on a level, we'll either do one of two things. We'll either front run it or we'll go straight through it. Okay, if we do go straight through it, then looking at the far side of this range up here, okay, and effectively then you just trade in this range, okay? If we don't end up doing that and we start coming back down and we lose this range and we start coming back down, then first and foremost, I'm going to be looking to see if there's a reaction at this level. Now, once again, there's a lot of eyes on this level because everyone's looking for that breakout. Obviously, it's been resistance. Everyone's looking for that breakout and then come back, retest here, and then on. It could happen. I'm not saying it can't, but it's just worth noting there's a lot of eyes on it. So like I said, for the last few weeks, if that does happen, then don't be surprised if you get something like that. Come down here, grab the liquidity. Bear in mind, there's a lot of volume down here. Okay? If you get no reaction, you get NAFOL reaction, then looking back down again round towards this EQ sort of level. No reaction there, trade it lower. Okay? Just level to level. But what you want to see at these levels is you want to see a decent reaction. Whether that's a physical reaction, you see a damn good, the wick gets bought back up very quickly and you're left with a big wick. Or B, you want to see something happening on order flow. You either want to see some good excess like we saw up at these highs, some good excess up at the highs, or in this case at the lows, or you want to start to see some CVD divergences. You want to see some signs of absorption. You want to see where the bigger players are getting involved. Okay? So it's just as simple as that. You know, we're just going level to level. Nothing hard, nothing difficult. Above, we've got resistance. Right now, we've got the local range. Below, we've potentially got support. But just keep an eye on that level, and I'd keep that as more of a zone. Okay? So that's it. Obviously, if you've learned something today from what I've shared, and you want me to carry on sharing these videos where I share with you the trades that we've taken and why we've taken them, then let us know down in the comments. And until next time, guys, as you were.